Welcome back to Beyond Bitcoin with me, Derek Graham. It's a weekly podcast on Bitcoin, crypto assets, and the macro events shaping our digital world, with crypto traders, fund managers, and Bitcoin maxis as our regular guests. If you like what you hear, subscribe and click, and we'll keep you up to date with all things crypto. Hey, good morning. Welcome along to another episode of Beyond Bitcoin. My name is Derek Graham, but wow, with me today is Dan Tapiero. And Dan is the founder and CEO and Chief Financial Officer, rather, of Roundtable, One Roundtable Partners, and also 10T Holdings. Extraordinary investments across 24 companies, some 1.4 billion under management, but most importantly, an early investor in the infrastructure of this space. Hey, Dan, welcome along to our little Aussie podcast, Beyond Bitcoin.
Hi, Derek. As I was saying before, happy to be here. I made a trip down there to Australia last year, as I mentioned, to visit my daughter, who was doing her second semester junior year in Sydney, and she absolutely loved it. And I think I was hard-pressed to come home. So it was my first time down there. We have quite a few investors in Sydney and Melbourne, so it was nice to meet them in person. And as I said to you as well, I participated in one of those swimming open water swim races that they have there, and really enjoyed that Australian swim culture, which is something I sort of knew about because we're always competing against you in the Olympics, but didn't realize how much it sort of permeated almost like the day-to-day life. And my daughter, being a swimmer, really enjoyed that as well. I'm happy to talk to the Aussies. I feel like, honestly, I know you're in Perth and you're sort of out there, and you definitely feel like you're separate from the rest of the world. But I feel like the Aussie entrepreneurial culture is very strong. And also, Aussies tend to understand gold because it's a big export and you produce a lot, and it's an important store of value. And so as we move to, and this is how I quickly jump to Bitcoin, is that store of value, real assets, hard assets, currency debasement or a hedge against the currency. The Aussies are always complaining about the Aussie as well. These are all things that make Australians, at least in my view, more open-minded towards understanding Bitcoin versus the US a little bit. I feel like we have the dollar, we have the NASDAQ. We're not really worried about store of value. Gold is not really as popular an asset as I think it is in Australia. We found a lot of interest in Australia, and that was one of the reasons why I was happy to join the podcast tonight, because anything I can do to push ahead adoption and help people get to the right place and educate themselves on Bitcoin and blockchain, crypto, Web3, however you want to call it, I'm happy to do.
That's fantastic.
So thanks for having me tonight.
Oh, absolutely delighted to have you on board. And I'm glad that you sort of sense there's a kindred spirit in Australia. We find the same kindred spirit with Australia, Canada, the US, in this sort of entrepreneurial view of things. But at the same time, Dan, we're very British. And that plays a role in our investment. Today is Melbourne Cup Day, and billions of dollars will be spent on a horse race in Melbourne as the biggest event of the year. And Australians have no trouble losing that. But when it comes to investing in new technology, they're a little bit more hesitant along the way, and they have to be reasonably sophisticated to do it. What is interesting about this space is I've often seen some of the family offices here. They've got gatekeepers who are accountants and stockbrokers. And their knowledge of this space is normally 0 to drug money's transacted on it. And there's a step to go through that education. How would you sort of talk about where you think the space is up to, how you educate that sort of section of the investment community so that they can start investing in this extraordinary asset class?
We have many investors from the traditional world, and I think our funds also, as you mentioned, we invested in 24 different growth stage private companies in the digital asset ecosystem. I have board representation on 12 of those, and as you're right, it's 1.4 billion we allocated. And I stay away from the venture, what I would call the venture part of this world. Many of the more well-known investors, A16Z, Andreessen, and then you have Paradigm and Polychain, etc. They're investing in very early stage, and I think they're really spending their time sort of deciphering which blockchains might end up becoming more successful than the other ones, and they take apart the code. And basically, that's very difficult for an average, I would say, civilian investor to understand. And I really break it down into simple terms and say, look, what we're going through right now is the digitization of money and value. So just if you think the internet was the digitization of information and ideas, made it easy for people to communicate more rapidly and simply and across borders. That's what the invention of Bitcoin and the blockchain is really all about. It's a medium, it's allowing for value to be transferred immediately across borders, simply and also safely. And of course, all of this was outlined in the white paper that was released in 2008. It's been, believe it or not, it's 14 years since the original invention of Bitcoin and the Bitcoin code. I think the thing that people have difficulty understanding is that Bitcoin itself is computer code. And so how could code have value? And I think that's very difficult, especially, as you mentioned, Australians, hard assets, real assets, they want to hold their wealth in their hand. It's real estate or mining. And I would say that's right. The analog world, the old world is really about that. But when you have a decentralized network, which is what really Bitcoin is, it's a decentralized network that holds value that cannot be hacked. And I think that's what's very interesting, is everyone thinks, oh, it's online, the internet, anyone can take it, it can be hacked. No, the Bitcoin network cannot be hacked. It's impossible to be hacked. And so in a way, I know this idea of digital gold is something that resonates with people. It's a store of value, a digital store of value that can't be hacked, that can also be transferred person to person. There's no intermediary. And I think it's hard to understand how the whole network works, how the system works. And maybe that's what keeps people away, right? It's just something, in a way, inconceivable. Instead of realizing that it's an invention, something I think as akin to the invention of the combustion engine. So it's just, I feel like often like it's the early 1900s, and you're telling people who are riding on horses that there's this car thing, and it's going to be faster and better. And the horse riders are saying to you, yes, but I've heard that it kills more people on the roads than horses do. And therefore, I'm not going to take the car because it's dangerous. And often I feel I'm a discoverer in that way, that I'm going out and finding new territories. It's a discoverer in the US and Virginia in 1620. It's a completely different paradigm. And so I don't know what sets off the light bulb moment necessarily for you. I know what it set off for me, but that light bulb moment that made me realize that this was a new form of money. And it is the beginning of the digitization of all value. And I think all value will eventually be put on a blockchain. And there are different blockchains, Bitcoin, Ethereum, of course, Solana, they're all different blockchains. So I don't know if that was a little bit insightful at all, but
it is, Dan.
That's really how I see it. Yeah.
You know, so my aha moment was probably early 2017. And it was at a time when I was looking to validate the provenance of an asset. And I've always been in technology. So this avant-garde, this being ahead, this facing doubters is something I've had the majority of my life. But at the same time, you surround yourself with people that are vibrant and interested and have got vision of the future. And that's a great space to be in, just for one's well-being in the way I look at it. And how do you transfer providence? And the group that was doing this software development for me said you should stamp it on a blockchain. And I said, what is a blockchain? And he said, go away, read this white paper, learn about it. And within probably a few hours of reading that and looking, I went, oh my God, this will change all of commerce in the future. Everything will be different. And Dan, that was 2017, and I did not envisage decentralized finance. I didn't envisage what might happen in metaverse. I didn't get what Web 3.0 might be back then. I just knew that it was going to be tectonic, and I wanted to be involved with it. Similar experience.
It's a permanent record. So that's what's so fascinating, that you were the Bitcoin code, and the proof of work algorithm that supports it is just so innovative. I don't think, yes, it's applicable to finance and money, but a decentralized permanent record that can't be tampered with. Like, you start to think about, what if all of the world's documents, documentation is somehow put on a blockchain? We don't need all of those legal briefs or all of the documentation that goes along with taxation and all the millions of things that we have paper records of. That's something that even in the space today is still, it's very at its infancy. There's nobody who has figured out how to apply that permanent ledger, that aspect of the blockchain, to a broader non-financial business for those specific purposes yet. And I think that's a very important one. I don't know what you've found. Is there anybody out there doing good work that you've come across?
The answer to that, I think, is yes. I meet, of course, Web3 developers. There's a group here in Australia called EarnOS, and they've developed a Web3 protocol that enables the very simple process of opting in to the areas that interest you and being paid for that. And therefore, the influencers also opt in, and they pay for that because they know that you are interested in what they do. And this Web3 product generates a return out of that. And that's just the beginning of the sort of things. A classic Web3 product where you're actually taking out that middle group, which is either the big groups like YouTube, etc., and enabling...
Yeah, I like that.
Yeah, it's really powerful. And this group I find fascinating, and they have pivoted 2 or 3 times to get to this, which is typical of this industry. You have to pivot, you have to move, because the industry moves so fast. I often call it Darwinism on steroids in how quickly as it grows. So I see Web3, of course, is in some ways layer 1 protocols being blockchain, layer 2, maybe higher speed blockchain, layer 3, decentralized finance. I look at layer 4, Web 3.0. What is it? It's the whole future of the next generation of the web. And without layer 1, possibly layer 2, but definitely layer 3, Web 3 doesn't work that well. So it's an integrated collection. Also, artificial intelligence and Internet of Things devices, I see all of these as integrated. I do not see them as separate investment strategies. They're all part of this new digital economy that is growing at a rapid rate. Self-assembling is quite extraordinary as it grows without anybody providing it with directions of what it should do, so to speak. So there's a lot of fast failing going on, et cetera, et cetera. So probably because of my experience in technology, I'm tolerant of seeing fast failure occur in these, and I expect to see pivots occur in these. But back to the question about blockchain and I actually did meet Scott Stornetta and spent about a week with him. And Scott Stornetta was on the white paper with Stuart Harbour in the creation of the original block that the New York Times used to be stamped on, so to speak, in the 90s. And then Satoshi Nakamoto took that on, credited them for it, and of course built a token management system on top of it. And he explained how they came about doing it by actually saying, look, I used to work for Bell Corporation. I was a research officer there. They didn't have anything for me to do. So I said in the 90s, I'm going to try and prove that this digital photograph is the original and this digital photograph is a copy. which was impossible to do because they're both identical. And so he spent months doing that, not with the intention of developing a blockchain, but the intention of validating one digital asset to the next. And he had his epiphany in Wendy's in upstate New York because he'd spent months doing it, couldn't work out how. And he was standing in a queue with the cashier in front. And he suddenly went, this is it. I'm in a queue. There's the cashiers. Now we call the Genesis block, right? Then there's another block of data, another block of data, another block of data. And the people in this restaurant see us and validate us. That's how he started with the concept of the blockchain. And then when I chatted to him about it, he said, there's nothing new. He said, that's what wedding ceremonies are about. Your friends validate the contract and you sign it. And all of a sudden, blockchain started to become something that made immediate sense to me there. Anyway, let's wind forward a bit from history. Yeah, it is fascinating, and he's fascinating too. He's a mathematician in upstate New York and a great fellow. And so moving forward, we still get this issue of Bitcoin's used for drugs. And the minute someone says that to me, I go, so your knowledge base is 5 years old. And then it's Bitcoin has real no value. And then we're getting a little bit closer because they're starting to raise objections and look for answers. But what I do find is generationally, it's very clear. So for the younger generation, say sub 35 years of age, they just get it, totally get it. They understand scarcity, they understand transactions, they understand the ability to trade and have this as demand and supply and the asset valued upon that. As you get sort of into your 60s, etc., then it comes to the physical gold. And so therefore, how could it be worth something? Gold's worth something. And I regularly say to them, so how much gold is transacted on ETFs every day versus the total amount of gold? And of course, it's a digital asset in itself. These journeys are journeys that I see people taking in their mind. But what you guys talked about up there in Token 2049, along with Anthony Scaramucci and of Sky Capital, and also Jenny Johnson from Franklin Templeton, who are, of course, very much traditional finance and who are deeply involved in developing technology solutions around tokenizing bonds, etc., is looking at the path ahead. And as I said, back in 2017, I was excited, but I couldn't see the path ahead to what it's done now. Dan, what is the path ahead, do you think, now that we've got so much under our belt in the...
Yeah, that is very hard. When I launched the funds or had the idea for it in the middle of 2019, the value in the total space was 300 billion. All the value of all the cryptocurrency and the value of all the equity in the space, it's 3 trillion today. Today, so 5 years later, there are 60 different subsectors within this broader digital asset ecosystem. And I don't think 3 years ago, for instance, the stablecoin transaction volume was nearly zero. And today it's over $10 trillion. So how many things in our financial lives go from zero to 10 trillion in now almost 4 years? Like, there's almost nothing. In 2017, there were no NFTs. There was no metaverse. It didn't exist. And now that space has actually undergone quite a correction, but had quite a boom in 21 and 22. And I think in non-fungible tokens, NFTs, they're not going anywhere. They're exploring. I think there are new things that people have been pushing their capital into. I think that's one of a little bit of the dangerous things, is that things can get very hot very quickly and then fade. But when you look at even DeFi, for instance, which you mentioned before, decentralized finance, literally 4 or 5 years ago didn't exist. It had a little bit of a boom period in 21 and now underwent a pretty nasty bear phase, and now is already moving back to where it was in terms of total transactions and interest in decentralized finance. And real world assets, the tokenization of RWAs, real world asset, I think that's certainly something that's picking up momentum now. It's still very small. You mentioned Jenny being involved there and pushing things ahead. It's true, but it's still very small. I think that's where, what we eventually see is we see the traditional world and the new world kind of meeting together somewhere in the middle. And that's probably where they meet, in the stable coin RWA space. I think
Yes.
DeFi is still a little more complicated. People borrowing and lending without a central counterparty, using DEXs. I think for most traditional people, that's still too far away. Getting comfortable, having all of their assets in a digital wallet, or people still, older people especially, still want to have money in a bank account and still want some interest from the bank or whatever it is. But I think we are moving away. And your point about people under 35, you're 35 years old, you're right. They see this intuitively. They don't go to a bank. They have a digital wallet. They're spending 8 hours a day online, whether it's TikTok or Insta or wherever it is. They have an equity account. It's on Robinhood. They're not, or eToro. They're not going to the Merrill Lynches of the world, etc. So
yes.
I think that on the one hand, you say, why has adoption been so slow? This idea that value and money will be digitized. And I do think it is somewhat generational, that it's very hard for older people to have that facility with the internet. And I know it's crazy to say that, but it's not that easy. And if you didn't grow up as a digital native, as most of these under 30-year-olds have, it's just there is comfort. You're looking for somebody to trust. No, in our world, it's a trustless system. That's the beauty of it.
Yes.
Right? That's the beauty of Bitcoin, is that you don't need to have a counterparty, a centralized counterparty in the middle. I think, though, for the time being, the CEXs, the centralized exchanges, Coinbase and Kraken and Gemini, I think they continue to be gateways for the old world into this new world. But once they buy their Bitcoin and they hold it a little bit and they start seeing the price movement and they get a little excited and they start thinking about it, like, oh, I own this Bitcoin and it was $8,000 and now it's $23,000, and what's that all about? Why is it moving? Then they start to investigate what's going on with the layer 2s and what is Ethereum and what is Solana and why are there blockchains? You come at it from the tech standpoint, I come at it from the money management standpoint and wanting to make good investments for my LPs and investors. And I encourage all of them. I say, listen, your exposure to this space should be, look, you should all start out with a little bit of Bitcoin and a little bit of Ethereum, a little bit of a venture fund, and a little bit of a growth fund. And that's, you decide how you should have your exposure. But from a financial standpoint, as an investor, many years being in the hedge fund business, you have to have some percent of your personal financial portfolio to this exposure. And then they say, why? Why do I need to bother with it? And then one of the most, I think, important reasons, and what really gets them to stand up and take attention, is that essentially over the last 10, 12 years, Bitcoin, but really the entire digital asset ecosystem, but I'll speak to Bitcoin specifically, has been the greatest returning asset investment of all time. And it's up over 200% annualized from 2010. And so what I then say is the NASDAQ has been a fantastic investment, okay, over the same time period. But the NASDAQ is down 99.9% against Bitcoin from 2010. Now, against Bitcoin. Well, they say, how is that? Bitcoin was a penny and now it's $70,000. The NASDAQ is up, whatever it is, 8 times or whatever the number is. So people just don't realize that Bitcoin has been a hedge against, not just a hedge against the entire fiat, but the outperformance has been something like, I don't know that we'll ever see anything necessarily like that again. But I have a look, Bitcoin was a penny and now it's $70,000. I'm very bullish on the future of Bitcoin, and I think it can go up many multiples, but I don't think it's going up 200% annualized for the next 10 years, right? That being said, if it does a 5 to 10x from here, I think that's very realistic over the next sort of 5 to 10 years. So I look at it from that perspective. I have a financial portfolio. I want to perform well. How could you not have exposure in the space? That's how I think about it. Maybe sometimes I get some of the older people excited when they realize that.